Good morning, everybody, and welcome to part 3 of the stimulus package and the second in a webinar series from Rees Group. From all of our team who are working remotely at the moment, like many others who have logged in to say hi and watch the stimulus package update. We hope you're all doing well. Tough time for everybody, but we had some fantastic feedback from our last webinar last week. And I was texting a few of our team over the weekend saying I had a feeling that there was some more stimulus coming, and obviously on Monday there was a release of additional information, which is why we're having this webinar today. I think one of the points I just wanted to make before we began is this is moving quickly. So the government is making policy at a very quick rate. And also to some of the questions you may have today, we may not be able to answer because what we're talking about today, which is the JobKeeper Payment, is not legislation yet. So until this is made legislation, there'll be some questions that we have a feeling about the way they're heading and the way that we should be dealing with them with your business, but it's not necessarily in concrete as of yet. But hopefully you find today informative, and we'll keep it fairly punchy. We're aiming on a half-hour total, about a 20-minute presentation, and then Q&A with a couple of members of our team who'll join us toward the end for the Q&A. So we might get going on the slides so everyone can see those. It's obviously the third part of the stimulus package, and it's part 2 in our webinar series. Next slide. So eligibility, are you eligible for the JobKeeper payment? There were some announcements made this week, and I just wanted to summarise, because we've been having these discussions in meetings with clients. The JobKeeper payment, which we spoke about last week, of $1,500 a fortnight, which people have to go to, go back a step. The JobKeeper payment, which is what we're talking about today, is the $1,500 a night per fortnight per employee payment. The job seeker payment, shouldn't have put it on the screen because I've just confused myself, is something I want to say about that is the partner pay income test has also changed to $79,762. The government described this package as a hibernation package. So what they're saying is really for the next 6 months, businesses are going into hibernation. In some cases, they've closed. In other cases, like our business, you know, we're not in our office, but we're still working. Many of you are like that. And there's even some businesses that are essential services and others that are doing better than they normally would. Some of the key points from the last 3 weeks is the first is the ability for individuals and businesses to freeze bank payments, so the cash flow loan payments for 6 months. An important point of note there is that interest still accrues. So you need to speak to your bank on a case-by-case basis. And the only point I'll make there is if you can afford to be making payments, our advice to clients is to continue to be making those payments rather than kicking the can down the road. I think that's probably the best way to describe that. I think if there is the ability to, absolutely keep making those payments. But if cash flow is tight, by all means, be speaking to your bank about that. The 6-month moratorium on rental evictions, again, hasn't been made fully clear yet, whether it's residential and commercial, but there is obviously, we want some stability in society, so the government has mentioned that they're going to be legislating in relation to eviction of tenants. The third point there is what we mentioned last week, which is the loans of up to $250,000 for an SME, which is through the banking system, and you have to use your existing business bank to be applying for those loans. They're the ones that are guaranteed 50-50 by the by the federal government. And the fourth point is the tax credits for SMEs through the PAYG BAS system, which will be for the March BAS that we spoke about last week also. So that's a summary of the hibernation package in total. On Monday afternoon, I don't know if any of you saw Scott Morrison, but essentially the package is $130 billion, $130,000 million. It's a lot of money provided for over the next 6 months. So it's a $1,500 per person per fortnight for the eligible JobKeeper payment. It's connected to the employers, and it's a flat payment to the employers of $1,500 per fortnight per employee. And the government made a point there that on average, that's 70% of the median Australian wage. And they made the point that it's in some cases for hospitality and other industries, 100% of the average median wage. It's available to full-time workers, part-time workers, and long-term casuals. Long-term casuals we'll talk about in a moment, but that is a casual who's been employed with the business for longer than 12 months. Applicable to employers and sole traders, and there to apply to the ATO. We'll put the site up in a moment. This is moving so fast that when we did these slides, there were over 300,000 businesses that have applied. As of last night, there was over 480,000. So by now, there's probably over 500,000 businesses that have applied for this particular package. Next slide, thank you. So some definitions and some technicalities. The definition of an eligible employer. So the employer must have been in an employment relationship with an eligible employee as of the 1st of March 2020 and confirm that each eligible employee is currently engaged in order to receive JobKeeper payments. We'll run through this in Q&A as well, but that can be people who are currently employed. It may be people who have been stood down. It may be people who are on leave without pay at the moment. But there is a myriad of employment relationships and types of employment that can be eligible for the employer to nominate the employee. The definition of an eligible employee are employees who are currently employed by the eligible employer. So your business, if it's, and we'll talk about the eligibility of the business in a moment. And I just mentioned including those who are stood down or rehired. They must have been employed by the employer as of the 1st of March 2020. Time, long-term, and as I said before, a long-term casual is a casual who's been employed on a regular basis for longer than 12 months as of March 2020. So they must have been employed from 1st of March 2019 on a regular casual basis with the business. The employee must be at least 16 years of age, and the employee must be an Australian citizen or the holder of a permanent visa. And I've got some other categories of visa, which we haven't had too many questions on to date, but that's important that it's not just all employees. There's been some examples of people who had come to the country on different visas that won't be eligible for this, and I've seen some of that on the in the media and news. And also, too, what's important is there's no double dipping. So the employee cannot be the recipient of a JobKeeper payment from another employer. So you can't be getting this from two employers, and you can't be with Centrelink actually seeking a job seeker payment as well. So there's no double dipping there. Businesses without employees, we've had some questions about this as well. So it may be a trust that's a contractor or a sole trader. So businesses without employees, such as the self-employed, can also register their interest in applying for the JobKeeper payment. Again, that's via the ATO website. That's on the front page of the ATO website, effective now. And businesses without employees need to provide an ABN for their business and nominate an individual to receive the payment on behalf of that business. And they've got to provide that individual's tax file number. So using a sole trader as an example, it would be the sole trader providing the ABN for the business name, and then the individual tax file number for that sole trader would need to be provided as a reconciliation point for the ATO. And there's going to have to be a declaration as to the business activity and the reduction in the business activity for the 30% reduction as well. People who are self-employed will also need to provide a monthly update to the ATO to declare their continued eligibility. So I think something that we are reading is this is not a set and forget payment. So, my business has decreased by 30% through the month of April, or 35% the month of April. Therefore, I'm going to register my business or sole trader, and I'm going to receive these payments for 6 months. It will be a ongoing reconciliation, self-declaration point with the ATO, and we don't know yet how rigorous they're going to be in checking this, but it will be checked. The ATO has in recent years stepped up a lot of audit activity, and this will be important that declarations are made and correct. And we'll be talking to many of you about that over time, over the next few weeks. The next slide. The registration process. Initially, the employers can register, as I said, for the JobKeeper payment through the ato.gov.au site from now. There was some, and we have had some discussions because the ATO, in some of the information that's been released, and the federal government on some fact sheets had changed the date, but the date that the subsidy is going to start is the 30th of March 2020. Importantly, were the first payments to be received by employers from the first week of May 2020. So from the first week, I think we need to be planning for the end of the first week, not the start of the first week of May 2020. To qualify, and this is a very important point, to qualify, your business turnover must have fallen by 30% or more for the business based on a comparable period of at least 1 month from 1 year ago. So the discussions we've been having with people there is that we can compare March to March 19 to March 20, but in some cases, businesses are not necessarily seasonal by month, but they're potentially seasonal by quarter. So I've been having discussions with people about, well, what if Q1 for the calendar year 2020 versus Q1 for the calendar year 2019 was down by more than 30%? Well, I think there's a very reasonable and arguable position for the business to qualify under that scenario. An important point too is that next point I have on the slide there, which is note that clarification has been provided recently and the government has discretion to set alternative tests that would establish eligibility in specific circumstances. Our understanding there is the government has provided for that for a lot of tech businesses. So tech startups might have gone from no income in March last year and then they've got $20,000 worth of income in March this year, but they're a tech business and their income might be down on December from 2019. So that's why they've allowed some discretion. And one final point I want to make about the eligibility is your business has already felt a reduction and seen a reduction in top line revenue, or you are anticipating that to happen and you've got some key indicators that are showing that's actually happening as we speak. So that's something, again, that you need to be talking to us about, because we've got a couple of examples where people may have had a strong March, but April is down significantly already and potentially looking to be down as well. So that's a further talking point and question point. Just on the registration process, the ATO made it, Scott Morrison made it very clear that the payments are being delivered by the ATO. They're actually going to be physical payments, so it's not going to be a credit like the PAYG amount. It's going to be a physical payment by the ATO to the business's bank account, and the employers making payments to the employees and then being reimbursed by the ATO. I'll come back to that point because that's been another talking point as well, is that how are we going to fund this for a month if we're a small business. Just to finish off on what the government was talking about there, obviously designed this package of 130 billion to keep millions of Australians in work. They want to keep us working and essentially receiving these payments through our employers, through the businesses, rather than you'll see the second last point there. Rather than us going to Centrelink and receiving the job seeker payment, and obviously overloading the government system and the Centrelink system there. It applies for not-for-profit businesses, not that Rees has any of those clients, but important point. Sole traders we touched on, and also to New Zealanders on the 444 visa system that are here in Australia. It applies to them as well if you've got Kiwis working for you in your businesses. We'll talk about payments later on in relation to SGC. So there's no SGC payment on top of this payment, but there is PAYG. So super is not payable on this payment, but PAYG is required to be withheld from the payment and remitted to the ATO. Important clarification point. And one of the questions we've had coming through already is in relation to that. These payments will qualify for payroll tax and work cover as well as part of your rateable remuneration and total remuneration for payroll tax and rateable remuneration for work cover. So we think the government's doing a pretty good job. I mean, the total support that's been provided for already is $310 billion, or 16% of our GDP, of the gross domestic product of the Australian economy in a given year. So that's just what's been pledged already. The government hasn't said whether they're finished or they're going to keep going. I think they'll watch this space. And funding this is a whole other issue. I think that we'll all be paying for it for many years to come, but I think it is provided for at the moment in a very turbulent time, and whilst the economy is in the state that it's in at the moment. The next slide is questions. So for the questions, we're actually going to open up our panel, and we have Danny and Gad, two senior members of our Rees team that are joining us. They've been assisting a lot of our clients with a lot of questions and queries that they have. So welcome Gad and Danny. I think they've been muted throughout the presentation so far. We'll just already. So one of the things I wanted to talk about initially was, and feel free now to be typing your questions as we come through, was the timing of these payments. So essentially we're now in early April. We have employees that have been employed up to date. You have an employment obligation, and so the questions that we've had relate to what happens, do I fund these payments between now and the end of May? And then, am I guaranteed to receive this money from the ATO? So essentially the answer is the employer is required to be funding, if you're on a weekly or fortnightly payment basis with your employees, you're going to have to make a business decision because there's a potential business risk. And we don't want to see people keeping employees on the books. And I'm not saying that we need to be taking employees off the books, but we've been talking about you've got to make a business decision about the employees that you have on your books and look at the risk of keeping them on and receiving this payment. And obviously you want to be keeping your quality staff and you want to keep the team together and the team going. But I suppose our advice and our comment is don't be keeping people on just because you're going to be receiving a $1,500 a fortnight payment for that person. If there is potentially in the mid-term to longer term a way in which you won't have work for them. But if there is work to be had at the moment and there are systems to be fixed and processes to be fixed within your business, by all means, we're telling people to obviously keep people employed because that's what the government wants, and we would encourage that. And help you improve your business potentially. Talked about the midterm, and also to just, we had a question coming through just about casuals. Obviously, I think I clarified that before about the permanent casuals. So the obligation about the super under the scheme. Gad, can you see that question there?
Yes, I received a question before. So where we've got a JobKeeper, where we've got a situation where an employee who's been let go, who's now been put onto this scheme, the payments that are made to that employee are not going to be subject to superannuation. However, if we've got employees who are currently on our payroll, as an example, we're paying them $1,500 a fortnight, and we're currently paying them super, you're required to continue to pay them superannuation. On another scenario, if we're currently paying our staff, say hypothetically $1,000 a fortnight plus superannuation, what we're required to do is top up their salary by the additional $500. Now that additional $500 isn't subject to superannuation. However, the employer may wish to elect them to remit superannuation on an additional top-up payment, but there's no requirement to. The other question, sorry?
Thanks, Gab. Yep, that's good. The other question there?
There's another question which was raised is that $1,500 payment exempt from income tax? Based on what we've been reading, it is not going to be it will be subject to income tax. And the basis behind it is you report income of $1,500, but then you'll also have a deduction for salaries of $1,500. So it'll be a neutral transaction for the business.
And just on that, it's one of the questions we had coming through as well. It's reportable on the IAS and BAS. It's essentially reportable like a wage payment on the BAS, and the ATO has made it very clear they want to use the BAS system and the tax system to be monitoring this. There's another question there, Danny, in relation to the payment backdated to the 30th of March from Evangeline there, and then also to the May payment. Danny, how would that be treated?
So what that means is the payments will be, eligible employees will be get back on the payroll from 30th of March, starting from that month from 30th of March to May. And then obviously $1,500 will be per fortnight. So what that means is, payments will be most likely being paid first week of May in this case. So if that's counted to be right, will be 1,500 times by 3 years, correct?
Yeah, so it'll be based on a fortnightly payment in that particular case. If you're not receiving that payment to the end of the first week of May, there'd be potentially 3 fortnights of payment. There's another question here that I might answer, which is, so if there's an employee, so the example is, what if I have an employee that we've moved to 4 days a week and earns less than $750, can I move them back to 5 days a week at $750? And also too, could someone who was earning $850 come back to this minimum of $750? Absolutely. You know, Scott Morrison made it very clear. That was from a question from a client of ours, David. Scott Morrison made it very clear that this is designed to keep Australians in work, and rather than losing a job, everyone's taking a little bit of pain, and if an employee has to take a cut but still receive the payment, absolutely. And then if there's a potential, David, for you to take that person from a 4-day to a 5-day and receive the full payment, absolutely. I think just on that point, the employees that are going to benefit from this are the part-timers that might have received. If you've got Sally, and Sally's working for you and she's receiving effectively $500 a week or $1,000 a fortnight, under this scenario, Sally's going to receive the JobKeeper payment, and that's going to be $1,500 a fortnight. So the employer is obligated to pass that amount on. You can't be withholding amounts. Obviously, you have to tax the amount, but you can't keep paying it at the lower rate. But that employee can be doing more hours for you. So I think that's a really good question that was raised by David. Gad, there's a question there in relation to the income tested job. I think there's just actually, I might answer that. There's a question in relation to, I actually mentioned that it was the job seeker partner income test was $79,000. This JobKeeper payment is not income tested at all with your partner at all. So this is a Do you have a connection with an employer? If the answer is yes, you are eligible, and you're an Australian citizen or qualify, you're eligible. So that was just a clarification. It's not the job seeker, it's the job keeper. So we qualify in this particular case. Gad, over to you on the next question there.
Yeah, another good question which was raised was about the withholding tax side of life. Because this is a payment made by an employer to an employee, there's no change in relation to withholding tax rates. So in essence, whatever withholding we've been doing for our employees historically, we'll be continuing to do that moving forward under this scheme. So in essence, that $1,500 payment that the employee is going to be receiving is before tax.
Great. I might answer a question we've got here. Is we have a client who stood some staff down yesterday, and they want to know if in next week's pay they're going to be receiving the JobKeeper payment. Should we be advising them to be taking the leave entitlements first? We'd probably encourage that. I think at the end of the day, it's a better position for a business to be reducing leave entitlements. And I think ultimately the business will be in a stronger position, and the balance sheet of the business will be in a stronger position if we advise them to be taking the leave entitlements first. Danny, there's a question there about the $1,500 being taxed at a lower rate. Would you like to answer that? Maybe you, Gab. We've lost Danny.
I think I've kind of touched base on that before. So the payment made to the employees are subject to standard withholding tax rates. So whatever we've been withholding before, that'll continue. So whatever rates that we've been withholding before, that'll still continue to the employees. These payments are not going to be reported separately on your PAYG summaries. So for those questions, to address those questions in June, as what Justin touched base on before, these payments are still going to be subject to the employees for other income testing done by the government as well.
Great. We have a question in relation to a casual employee being employed for 11 months. They will not qualify. They must have been employed for 12 months as well. Question, and we've had a couple of questions in relation to how is the AT going to be checking sales figures. This is a self-assessment system. It's a bit like income tax. You've got to self-assess. So working with ourselves to ascertain whether you qualify is really important. And in some cases, for some businesses, as I said before, we'll be looking at month to month. So month of March 19 versus month of March 20. In other cases, we'll be looking at whether it's a period of a quarter or not. And we will need to have the data in our online accounting system to justify and qualify our claim, because there will be questions asked. We don't know yet what the timing is going to be like, but definitely through whether you're using MyOb or Xero or some other system, we'll have to have the records to back that up. Absolutely.
Following on from Justin's discussion point there, and just want to kind of talk about STP reporting and data matching. So we've seen the tax office historically use the STP reporting for other data matching areas, and you'll guarantee that you will be captured in this area. So if we've got employers that are not passing on the full $1,500 to the employee, to those eligible employees, you will get caught by the tax office for hoarding those funds through your STP reporting. So if you're not too sure how much to remit to those employees, please reach out to our office, and we'll walk you through that process.
Great. A couple of other questions, which is really healthy questions coming through about, if I'm paying someone less than $750 a week or $1,500 a fortnight, but then I'm now paying them $1,500 a fortnight, aren't I paying more PAYG tax? The answer is yes, but you're really you're paying the government's money back to the government. So it's not like it's coming out of your pocket in the short term. And also too, can we clarify, if we put a staff member on due to lack of work, would we need to keep paying them the $1,500 per fortnight, but not super on top? Absolutely. So just to clarify, Gad and Danny, superannuation is not payable on top of these JobKeeper payments, correct?
That's correct.
That's correct.
And to clarify, we've just had another question about contractors. A contractor is not treated as an employee of the business. The contractor will have to apply in their own right to be eligible with the ATO for the JobKeeper payment.
There's a question here, as in, does the business still have to be currently trading? To our understanding is that if the business has been required to shut down for commercial reasons, as in if you've got a cafe or a bar and there's been a requirement for you to shut down, therefore you're not trading, you're still eligible for that payment. So one of the things that the government's made clear is these payments are obviously to help the businesses currently run, but also for the business to have connectivity with those still have connectivity with those employees that have been let go or stood down.
A couple of final questions. We're just coming up to just over the half an hour. In regard to part-time employees, did we say that if they're earning $780 a fortnight, they'd still be eligible for the full $1,500 per fortnight? Absolutely. I think the winners are going to be the employees who are on part-time and earning less than $1,500 a fortnight. I think they're going to be the ones benefiting. But the whole idea there is that the government wants to inject money into, I mean, if these people are working part-time, they may have rent commitments. The government wants to inject income back into the economy. So to clarify Danny's question there, yes, they'll be receiving basically a pay increase. But you could probably have them doing a little bit more work for you, I'd say, potentially an extra day a week or whatever it might be as well. Any other questions there, gents, just before we wrap it up that anyone can see? Work cover is, just to clarify, work cover, these payments form part of your rateable remuneration. And then also there's a question in relation to Gad there, just in relation to casuals having worked for the last weeks, they're eligible for the JobKeeper. It's really a balance, isn't it, about keeping that casual and paying them some funds during the month of April until you receive the JobKeeper, because it's a balancing act for the business as well. So I think if the business can afford to be paying casuals, because they do rely on week-to-week payments until the JobKeeper payments received, that would be correct.
Correct.
All right. So I think we've had a couple of comments saying thank you very much. I'd like to thank Gad and Danny for the questions at the end, and also too just for you taking the time for logging on to part 2. I have a feeling there'll be more webinars to come over the coming weeks, and appreciate your time. We know there's quite a few people from outside of our network that have joined today, so we appreciate you taking the time as well. Stay safe. If you need anything from us, please email us, advice@Rees Group for those that don't have a point of contact directly within the firm. And have a safe day, and all the best. Thank you.
Thanks.